This week on said podcast, we find out, is your P&L lying to you? And why would it do that? Welcome to the Profit Cash Growth Podcast. This is the podcast for 6 and 7 figure business owners who are looking to grow a financially successful business. My co-host, Claire Hancott, is a finance director, chartered accountant and entrepreneur. And every week, I'll be exploring guidance and frameworks designed to help you increase your profits, improve your cash flow and grow your business. I think I've just came up with an amazing quote there. I want to break up the afternoon, not take up the afternoon.
Yeah, that is
what
true.
What am I talking about? Right.
We're about to go to the farm with my brother. My brother's wife has gone out for the day. Yeah, my brother's wife's gone out for the day. And so what happens is he basically will send a WhatsApp to everybody in the family saying, do you want to do something today? Which basically means he doesn't have to parent his kids on his own. I should be so mean because we don't have kids, so I don't understand how annoying that is when that happens and you've got 3 children to chase
I felt
after.
like I don't want to give up my whole weekend. But
exactly.
I'm like, if it's a couple of hours, that's fine. So I'm happy for it to break up the afternoon, but not take up the afternoon.
Yeah, it's also other people's kids as well. You know, there's only a certain amount of time that you can spend with them. Well, that we can spend with them. We're not particularly child orientated, are we? I'm going to shut up now because you sound like terrible people.
So this week I've been looking at the history of door handles.
Fucking hell.
And here's a really weird question for you. Why do you think we don't use doorknobs on all doors? So the doorknob came before the door handle.
As in,
and it's a perfectly...
like one that you twist?
Yeah, and the doorknob. And it's a perfectly sensible and usable... It does the job.
Not
so
if
why
you haven't
would,
got hands.
Why would we change?
Or you're old and you've got arthritis.
You were like on it straight away, aren't you? Like you just got the answer. That is the thing. When they invented the doorknob, every door had a doorknob. You go back years, like they all had doorknobs because people only invent and they don't think about the unbodied person or the person with arthritis or, you know, think about this, right?
After the war, how many people lost an arm?
Yeah, that. Or just think about like the multi-use, like you can walk in a room holding other things in your hand and open it with your elbow, can't you?
That is true, yeah.
Can't do that with a doorknob.
Yeah.
Fascinating, isn't it? I also had this one about what would spectacles look like if humans didn't have ears? Like, what would they have looked like? How would they have been invented if humans didn't have ears? So, like, there is a fundamental design requirement for spectacles, which is that we have ears that stick out.
Well, some people don't have ears, do they? Like, there are some people born with disabilities, and you know they just don't have ears like we've got ears. Yeah. But also, when you see babies, when they put glasses onto babies, they often are like elasticated, so it's more like goggles, so they just go around your whole entire head and stick.
This is what we said. So if humans didn't have ears, basically glasses would be just goggles, wouldn't they? They'd be like they're strapped around the back and you'd bit like flying a plane or something. I don't know where I'm going with this one, but
I feel like for anybody who hasn't listened to this podcast before,
I feel like I haven't got enough to do. Is that what you're thinking?
Yeah. You're sitting there eating... Sorry, everybody, because you can't quite see Simon at the moment. Simon's pretty much rolled out of bed, put his jogging bottoms on. He's sitting here eating cheese and talking about what would happen if humans didn't have ears and telling us that he spends his time researching door handles. This is not the typical business podcast.
And I run 4 businesses. I mean, it's remarkable, really. They're just very well run. I've got some very good people in the world. Cool. This week's news story of the week. So this week, Claire, I picked out this one. A tiny town, 14 salons. Why are barbers taking over the high street? Yeah. And I'm seeing this everywhere. More than a dozen hairdressers have moved into this Welsh town as landlords are desperate to fill shop vacancies. So they're happy to take any tenants and they're all barbers. But actually, they've said sort of nationally, there are fears of links to crime. And I don't think this is just that unique to this Welsh town because, I mean, even in like our town, the biggest thing people complain about all the time, every time a shop comes, it's going to be another Barbers. Oh, it's going to be another Barbers. There's not that many of them, but barbers are mental. But it does feel disproportionate. Do you think we have more hair salons than there could possibly be need for people to cut their hair? Because I get it's a need for
not
everyone.
Hair salons, I think,
and barbers, like the whole thing.
But I think there's a very distinct difference because the hair salons are generally, in our town anyway, they're a bit more old-fashioned. They're run by women. They've been there a lot longer, and they've clearly got people coming in and out of them. The barbers, if you go past any of them on any day but a Saturday, there's literally nobody in them. and they're popping up.
They are always busy.
But to be fair, this isn't like speculation, people saying that there's money laundering going on. This is actually been...
Who said that? We jumped a gun here.
No, this...
Is that the link to crime they're talking about?
Yeah, that's the link to crime. It's money laundering.
They think it's money laundering.
They set up like these cash-based businesses, such as a barbershop and things like that, and then basically they money launder through. They launder money through them. So essentially, criminals will drop off bags of cash, and then the barbers, not all barbers, the barbers will pretend that it's takings for the day, and then it becomes legitimate money that they can then extract
this country
and
sound like
use.
The Sopranos. It's
but
like...
unfortunately, it is. Like, if you go on to, I mean, if you're really bored, you can go on to the HMRC website, and they've written about this, but they said it's very difficult to tackle because short of sitting outside the businesses and counting how many people go in.
It's too labour intensive to tackle.
But to be honest, there would be an army of volunteers. I'd happily go and do that outside some of our local barbers if I knew I wasn't going to get shot or stabbed or something. Like that, it is absolutely...
Good use of your time, is it?
To tackle crime, I don't think there could be a better use of anybody's time.
It definitely... When you see the numbers, so here's some stats, definitely would raise a red flag for me. So the number of barbershops in the UK is up 50% since 2018. So it's now at 18,411. So basically like 5,000 barbershops have opened in the last...
But
actually, if you look at the immigration numbers, maybe we do need that.
But sorry, it's not just barbershops, it's Turkish barbershops as well. And
it doesn't necessarily say that, but they are the predominant one, and Kurdish, apparently, whatever that means. Turkish and Kurdish. Villages mean ever more middle-aged men are having their unruly bristles exfoliated.
Yes, it's just bullshit. We all know. I mean, don't get me wrong, there are some legitimate customers going into these businesses and getting their hair cut, but there is no way. The cost of being on the high street is extortionate now. There's no way these businesses are sustainable with the amount of people that are going in them.
Look at this little village. This is a map with all the dots of the barbers on it.
So this particular one that was written about in the Times, where there's 14 salons, did it have a population of like 7,000 people or something?
5,600 residents for 13 salons.
Which is just insane.
Have you got a calculator? Can you divide that? Like, if you got your haircut every 4 weeks, then, yeah, if you had your haircut every 4 weeks, 5,600 residents.
Okay, so 5,600. Let's say men get it done even once a week, and 50% of the population is men.
Once a week?
Divide it by 2.
Who's getting their haircut once a week? Are you mental? Once a week? I get mine done every 6 weeks, probably. But 4 weeks, I think it's got to be done.
So that's 5,600 haircuts a year. Divide it by how many salons? 14. Means each salon is only doing 400 haircuts a year. So that's basically one haircut a day. At what? 15 quid? 20 quid?
Yeah, it doesn't stack up.
It doesn't stack up.
There you go.
The numbers just simply do not stack up.
You should work for HMRC.
I should work for HMRC, shouldn't I? Look how quick that was. How
Anybody
easy
would think
was.
you were a numbers person. I think the problem is they know there's an issue. There's nothing they can do about it. It's like a lot of things. It's like shoplifting, isn't it? They know it's a problem, but there's nothing they can do about it.
I simply don't understand why. I guess there is a how incentivized are they to do something about it? Because ironically, this is taking illegal money and putting it through the tax system, and businesses pay tax, they then pay business rates.
Ironically, it's brilliant for the government.
How incentivized are they to actually resolve this problem?
Raising massive amounts of tax. Yeah, it's a good point, really. Never thought about it like that. All right, from money laundering and mop cuts to P&Ls. Let's move on to this week's deep dive. So, come on then, Claire, why is my P&L lying to me?
Well, this is actually a graphic that we've got on our website, and I use it quite a lot if I'm doing like keynote speaker talks and things like that. And it's an iceberg, and your profit and loss is just the tip of the iceberg.
Yeah.
And really, if you want to understand how your business is running and you really want to improve it, you've got to look at far more than just the profit and loss. That alone is not enough. It's not really painting the full picture.
So if your business was the Titanic and you just saw the tip of the iceberg and you didn't realise that it was going under the sea, you went really close to that tip, you would crash your business.
And do you know what this is? It is a quite a sobering metaphor, but yes, very accurate, Simon. We actually see this a lot because businesses don't go bust because they don't make profit. Businesses go bust because they run out of cash.
Yeah.
So often when a business goes bust or has financial issues, it's just simply because they haven't been managing the cash properly. They haven't been regularly reviewing other things beyond their P&L. They're looking at their P&L and thinking, how do I improve cash flow? And sure, absolutely, you might find some ways to improve your cash flow from your P&L, but that's not how you're going to drive cash and value in your business. The value is in the balance sheet, the cash is in the cash flow statement. So profitability is in the profit and loss. You've got to have everything.
Driving the plane and only looking at the navigation and not checking the fuel gauge, not checking the oxygen level in the plane, and all these other things that can also kill you. Yeah, exactly. Right. So if I shouldn't only be looking at my P&L, Claire, what should I be looking at instead or as well as? I guess it's not instead, is it? It's definitely as well as. You should definitely look at your P&L.
Yeah.
You should
100% you should be looking at your P&L. There's so much value in your P&L. And if you're starting out, I always suggest that's where people start.
Yeah. We can go down a whole route about whether your P&L is set up right and whether it's delivering the right management accounts, or as you say, whether it's in alphabetical order, which is your favourite bugbear.
But just get something. If you've got nothing, get something. Print a P&L off of your finance system in whatever format it comes. Just start somewhere.
Okay. So in addition,
assuming that you're doing that already and you're looking for what else should you be doing, well, firstly, we recommend that everybody has a weekly KPI dashboard. And I speak to a lot of business owners and they've got these really good KPI dashboards, but they're for them. And it's always a bit of a bugbear of mine. Like when I like your KPIs to be up on the wall, or ideally on a TV screen and changing constantly. That would be like gold dust. But we have our weekly KPI dashboard. It gets talked about in the Monday morning meeting with everybody, and then it goes up on the wall.
Yeah. This is like, there's so many different creative ways, and I want people to really think about creative ways that they can like make their KPIs the backbone of their business for their entire team, because I see lots of businesses in my industry, and the very, very best ones, we all track the same flow of KPIs from opportunity to valuation to instruction to sale to completion, and we work through those KPIs, and different people have different creative ways of doing it. And these lovely ladies up in Stamford have this fantastic way called filling the jugs. And you know, there's a bit of a connotation to the team of ladies and they're all filling their jugs, and it made me laugh. But they literally have, like, drawn on their wall in their office, these different jugs. And as the business flows through, drops through to the different parts of the jugs, they fill their different jugs with different amounts of money. And it's just an incredibly, like, visual way of engaging with their team about, you know, what could be really dry KPIs. And I love it. And it's like, I think it's that. You should think about how you really display these to people, because actually most people don't engage with just a bunch of numbers on a whiteboard. Actually, can you display it in different ways and make it almost like gamification it? Do you know what I mean? It's very clever.
And there's also a risk as well that I see repeated with a lot of businesses in terms of sales. And when you're in a business, you know, like I've never worked in a sales department. I've always been in a finance department. So if I go to a meeting and the only KPIs that they're talking about is sales, it's very difficult to engage a finance team in the sales numbers. And I know that sounds silly, but think about, you know, your warehouse team, picking and packing. They just think it's the sales team's job to bring in sales. Like, they're not going to necessarily connect to those numbers. And that's where I see a lot of people make the mistake, is that their KPI dashboard is completely sales focused. And it's therefore very difficult to get engagement across the entire business for that.
It's not thinking in languages, is it? That these different people in different departments, they almost talk different languages. So how do you take the language that you speak and actually put it through a translation so that they can relate to it? And that's quite key, isn't it?
So when you're looking at your weekly KPI dashboard, it is going to be different. You know, typically we're talking about businesses £1 million and upwards. So 7 and 8 figure businesses, everyone's going to have a unique KPI dashboard, but there's going to be some commonality. So, you know, at the end of the day, every business exists because it has sales. So I always suggest putting your weekly sales number on there daily, ideally, if you've got time to do that. But otherwise, a weekly sales target is the way to go.
Great.
Also, lead generation.
Yeah.
Because that's also really easy for people to then understand the link between, okay, what happens from leads through to sales, and maybe value or maybe quantity. It depends on what's right for your business. But then you start thinking, okay, what about things like average order value or quantity of orders or quantity of complaints? You know, what is it that's really important to your business? Put something like that on there, because something like customer satisfaction score or returning customers or something like that, it just touches a bit more of the business than just your sales department, because it's all about the holistic experience that a customer might get when they come to your business, for example.
Actually, only you will know in your business, but you've got to go through all those sort of different things, and you do have to work out what are the ones that move the dial, because you can analyse everything, 100%. And if you analyse everything, you analyse nothing, as they say.
Yeah, absolutely. And we see that with some of the business owners that we work with, the most difficult business owners that we work with in terms of driving their numbers are the ones that want everything.
And too much information is as good as not having enough information. That's the challenge.
Exactly. It's almost like you heard me do a keynote speak last night about that, isn't it? The hardest business owners to get to do anything are the ones that want, like, literally chapter and verse. They want to know every single cost that's going through the business and things like that. And therefore,
but they don't know how to apply it.
Yeah, they're just focusing on detail and not action.
Okay, so we've got our weekly KPI dashboard and various other things.
Cash has to be on your weekly KPI dashboard. So either you could go for something such as cash generated or cash in the bank. That's easy to understand and easy to get to. So I can see why people do that. But generally, if you're a business that's going to be giving credit to customers, then put something on there about maybe overdues or cash that needs to be collected so that all your customers don't become overdue. That would probably be the KPI that I'd focus on, something around debtors.
Yeah, cool. So we've got our KPI dashboard. What else should we be looking at?
So next is... we've got your obvious, so I'm gonna skip the next point and come back to that at the end.
Yeah.
Cash flow.
Yeah.
Absolutely understand how cash is flowing in and out of your business.
Yeah. So this is like, in addition to having a top line view on your KPI dashboard, you're talking about something more detailed here.
You basically
really know your cash.
A really summarised, kind of like a profit and loss,
right?
But for cash flow.
So me just logging into my banking app each morning and checking there's money in there is not good enough.
No, because if you're just looking at that, you're not really understanding how much. If I said to a business owner, how much went out of your bank account last month and what did it go on?
Yeah,
they probably wouldn't know. They would know the net of what's the difference between what came in and out, like how much has my bank gone up or down, but where's that actually gone? How much did you spend on loan repayments last month? How much did you spend on salaries last month? How much did you spend on taxes last month?
Yeah,
it's understanding those individual things. How much money actually arrived in your bank account from customers?
But don't we think we get that from our P&L?
No, because there's always a difference between the timing of cash, particularly in bigger businesses. When you're a really micro business doing low 6 figures or 5 figures, cash generally equals profit. There's not going to be that much difference. But when you get a bit bigger, think about your VAT bill. You pay your VAT bill quarterly.
Yeah.
So the impact that has on a quarter when your VAT's due. Even your payroll taxes. You do payroll, but you don't pay your taxes until the following month.
I always find like cash is like the equivalent of if you took your P&L and put it in like a time box under the ground for 3 months and got it back out again, it'd be accurate.
Do you know what? That's not a bad way of looking at it.
Yeah.
But, sometimes you pay things up front. Sometimes you get credit terms. Sometimes you put them on the credit card, but the credit card doesn't have to be paid till the 45 days after. It's like all of these things that go into the mix that say you could have a profitable month, but negative cash flow.
Or the P&L is the dream that you had and the cash flow is just the reality that you had.
Yeah.
And so like one's what you would like to happen in an ideal world and one's what actually happened.
Yeah. And it's things like loan repayments. As soon as you've got a finance product and you're making a loan repayment, that's not in your P&L. Directors' payments, so dividends, things like that. All of those types of things are not in your profit and loss. So if you're just looking at that, you don't really have a clue what's going on.
Weird, isn't it? Because like when you really, really think about it, the more you say this, I should know this is stating the bloody obvious. But actually, like we all just look at our P&Ls like it's the be and end all. But do you know what? Like when it comes to just like running a business day to day, actually, like having it all plotted out in terms of cash in and out, it's almost more important to keeping you alive. It's just weird, isn't it?
Because it also, I see a lot of businesses that are just so focused on getting sales, and when the cash doesn't come in from customers, you might as well have not made that sale.
Like, it wouldn't really matter, like, hypothetically speaking, like, where this really wouldn't matter is, let's say that I just started a business, but I had £1 million working capital. I just put £1 million in the bank account. Probably wouldn't matter, would it?
Well, what happens when that million's gone? If you're not focusing on generating cash?
You're obviously assuming that you've got reasonable processes, but like it almost wouldn't matter as long as people did pay you what the timings of all that, because you have so much like contingency sloshing about, it wouldn't matter. But like no one operates like that, do they?
The reality is that you can't grow a business on profit. You can only grow a business with cash. Everything costs cash. It doesn't cost profit. It costs cash because you can invest in equipment and it doesn't touch your profit. You invest in equipment, it touches your cash. You pay taxes, it doesn't necessarily touch your profit, it touches your cash. It's all of those types of things. So you can only grow a business with cash, and that's why I prefer to help businesses focus on cash generation, because when you've got cash, you've got choices.
Yeah, it's definitely the biggest bit of the iceberg that's hidden that's going to kill you.
Yeah, it's definitely your cash flow. But what I would say is that accounting systems will generate a horrible formal cash flow statement that even a lot of accountants struggle to understand. It will basically take your profit and reconcile it back to the cash that was generated. But they're really bloody complicated. They'll put terms on there like free cash flow, operating cash, investment cash, capex, all of these things. And it's like, actually, as a business owner, they're just way too complicated. As with all of your reporting, it needs to be bespoke. And I think we've actually got an example management accounts pack on our website. If people go onto our website, have a look at that. There's an example cash flow statement of how we like to lay the cash out.
Great.
Dead simple. And then you can literally take one number and say, okay, how do we improve this number?
Love it. Anything else that we should be looking at?
So we've got your balance sheet. Your balance sheet,
yeah.
So that's going to show you all your assets and liabilities.
I think most people know what a balance sheet is. You know, Richard Branson didn't know what a balance sheet was until he was 14 years into business.
Yeah, and do you know what? If you ask an accountant or a bookkeeper to explain a balance sheet to you, I think probably over half of them probably wouldn't be able to eloquently explain it to
How
you.
It links.
Yeah, and I think so. Even
go on then, test you now.
Well, it shows your assets and liabilities. So it shows what your business owes and is owed to it, and it shows what you owe to other people.
Okay.
In a nutshell. But I really like there's a few key things that you can pick out of the balance sheet that will be useful for every business. So things like looking at like your creditors and your debtors, so your suppliers and your customers, what's outstanding for both of those. You can get an idea of the actual taxes due, because you should have an accountant that's making provisions on a monthly basis. So you're making estimates as to, we're partway through the year, what's the tax liability that we've got so far based on the profit that we're making. All of those types of things are in your balance sheet. But a little golden thing that we tend to look at on the balance sheet is the equity. So equity is essentially the value of the business or the shareholders' money that's in the business. It's the money that shareholders originally put in to buy the shares, which is normally only £1, but it's the retained earnings of the business. So all the profit that the business has made that hasn't yet been paid out as dividends. And
does it also give you basically, does it kind of show you the true value of a business?
No, not really. Business? Honestly, I very rarely see balance sheets that reflect the actual value of the business.
Okay.
But theoretically, the equity is the worth of the business, but it's not. It's just the net asset value, but the assets aren't often are not reflective of a real asset value. They're just an accounting calculation. Okay. So it can be a guide, but I've never come across a business that's actually worth what its balance sheet says it is.
Okay.
But the gap between cash and equity is really important. The shareholders' money in the business that it hasn't yet taken as dividends. If you can't pay that amount out, where's that cash gone? It's not necessarily a problem, but you might be trying to extract more money out of the business and you simply haven't got the cash flow for it, and that you need to figure out where that money's gone. And then finally, small businesses are not going wild on overheads. I very rarely see that much opportunity for cost reduction. Beyond doing...
They're brilliant. I mean, small business owners, by their own age, when it's your own money, they're actually brilliant at managing their costs, because it's the thing that matters so much. This is why there's so much difference between them and, big bloated government departments or big bloated organisations that just, where it's not their own money. Of course it matters. It's just, you are right. It's just, this is not an area of opportunity in most cases for small business. They don't run away.
There isn't no opportunity, because often you come across businesses and there's like these one-time things we can do. So, for example, can we renegotiate with the landlord?
Yeah.
Can we have a look at a key supplier and swap to a different supplier or something like that? So sometimes there are these one-time events, but generally... cost control, small business owners tend to be quite good at cost control. Yeah. So therefore, the success of small businesses is completely down to, from a profitability perspective, the sales and the gross profit. So it's either pricing, 9 times out of 10 it's pricing, to be honest. Yeah. So therefore, you have to have a deep dive on your sales and gross profit analysis every single month.
Okay.
Ideally, you want to understand your sales and gross margin per product range or per area of your business unit, whatever's right for you. So if you've got different locations, it would be the gross margin per location. If you've got different product ranges, it would be the gross margin per product range. So whatever's right for your business.
And is this gross margin in pounds and pence, or is it a percentage ratio?
Both.
Why is it important to track it as a percentage?
Because the numbers will fluctuate every month, and it's very easy to look at a number and think that's better than last month because the number is bigger.
Yeah.
But actually you could make 500k gross margin at 10%, or is 400k gross margin at 20% better.
Got you, yeah.
Because obviously the value is going to be totally driven by what's happening in your sales department, but the percentage is mostly going to be driven by how well your pricing is structured and how well you are managing deals with your suppliers or sourcing products, making products, that type of thing.
Does tracking the margin as a percentage help you identify seasonality problems in your businesses where you may the margin's changed, so therefore we've got like some sort of seasonality issue would you not notice that because your overheads are fixed?
The only time that firstly, you shouldn't have any fixed costs in your gross margin calculation. So if you've got salaries in there and things like that, that's going to completely skew it because you're going to have to cover a base amount of salary before you can make any gross margin. And so one month you could have a negative gross margin when actually you've done a highly profitable job. And it's just simply because you didn't have enough capacity to cover those salaries. Yeah. So don't put any fixed costs in your margin. In your margin calculation, it should be true direct costs. So the costs that only are incurred when you do a job.
So it would be a net profit percentage that would help me identify seasonality more because it showed me times where people aren't coming through the door, but my overheads are, so my net profit percentage has dropped, and therefore I can go, I can see every August and December, we drop. So maybe we need to think harder about how we fill that seasonality gap with the different type of products or services that attracts people in to fill that.
Yeah, absolutely. And you can just simply do that by putting a bar graph with your sales every month and saying what's your quiet months, what your busy months. So the only exception that I would say in terms of looking at your gross margin and expecting seasonality to affect your gross margin percentage would be if you're a business that's got dynamic pricing. So maybe hospitality, hotels, that type of thing, where it's far more expensive to go in the summer holidays than any other time of year. So that obviously then would affect your gross margin percentage. But what we tend to find is that businesses that have big jobs, so it's really common that a lot of businesses we do it in our accountancy firm. We've got our kind of core recurring monthly jobs, and then we do these one-off jobs. So we might do due diligence, we might do a project on a system implementation or something like that, and the margin that we make on those is very different to our day-to-day business. And that's why you've got to strip the two out and also look at the percentages, because on the months when we have big projects, we make value-wise, we make loads of gross margin, but actually our gross margin percentage is down.
Okay, great. So your P&L isn't actually lying to you. It's just not quite telling you all the truth.
It's not telling you the full picture, is it?
No. Great. Thanks for that, Claire. That was fascinating. Let's move on to this week's Profit Cash Growth Extra. So this week, Claire, I've got a little tip. It's nothing new, but I've just started using it more and more and more. And it's tool that's now, I think, available on pretty much all email clients. Apple have it. You can do it even on your phone now. And that is to send emails rather than send them immediately. I love this. And I like this mainly for being slightly more impactful in people's inboxes. So I use this for solicitors especially. So if I'm going to send them an invoice over the weekend, I'm going to send it to schedule to drop in their inbox at 8 a.m. on Monday morning. So I'm top of their inbox. So little tidbit there if you want to make sure you're top of somebody's crowded inbox and you potentially stick out a bit more. But the other tip I've been using it for, which I'm starting to like, is sending myself emails. So what I'll do is when someone sent me an email with something that I need, but I don't really need it until next Friday, what I do is I forward it to myself, scheduled to drop in my inbox at 8 o'clock next Friday. It disappears from my inbox, and then next Friday at 8 o'clock, it pops back in.
Interesting. Do you know what? I really like this. You can actually, on Outlook, you can set rules that mean that no emails go between certain times. So particularly if I'm working late in the evening and sending emails to customers, or particularly my team where I know they've got emails on their phone, and I don't want them to get them to them. I need to get this out of my head now, but I don't want you to be sitting at home at 10 o'clock at night reading it. So,
and I don't want people to think that I'm sat there like a loser at 10 o'clock at night.
No, I am sat there like a loser at late.
But I don't want people to know that.
No, I don't care about that. But yeah, I just think sometimes it can be really good. So you can actually just completely set your rules in Outlook so that nothing goes outside of hours.
So you don't even have to think about it. You just send loads of stuff and you just know they'll only drop in people's inboxes
the following morning.
Really good. It's amazing what you can do with email clients.
Delay
these days,
send, just search for it.
constantly things coming out.
Yeah.
Lovely. Well, I hope you've enjoyed this week's podcast. I certainly have. And if you feel like you might have outgrown your current accountant and would like to work with Claire and the team at Profit Cash Growth, whiz yourself over to the website profitcashgrowth.com. On there, you can also get a copy at the moment still free of Claire's book, The Profit by Numbers 39 Lessons to Master Your Business Finances. As always, dive into the podcast, dive back through all the episodes. They are all evergreen in terms of the deep dive. So there's loads and loads of stuff you can learn if you're a business owner looking to grow your business. And just share this episode with a friend if you know anybody. That would super help us and help more people find us. And we will see you again next week.